Question 1. Which of the following is the primary purpose of forming a captive insurance company? A. To reduce insurance premiums by self-insuring risk. B. To allow a parent company to take advantage of group insurance discounts. C. To avoid paying taxes by insuring non-core business activities. D. To limit exposure to state and federal regulations related to traditional insurance companies. Answer: A. To reduce insurance premiums by self-insuring risk. Explanation: captive insurance companies are primarily formed to allow the parent organization to retain its own risks, effectively self-insuring. This approach can lower the cost of premiums and provide more control over the company's insurance policies. Unlike traditional insurance companies, captives are directly owned by the parent company, which allows them to manage their risk retention and capital structure more effectively. Reason B. Group insurance discounts are typically not the main reason to form a captive insurance company. Group captives involve multiple entities pooling their risks but are separate from individual company captives. Reason C. Captives are subject to specific regulatory oversight, and attempting to avoid taxes would be considered illegal and unethical. Reason D. While captives can help mitigate some regulatory burdens, they are still subject to oversight by insurance regulators, including state authorities like the Georgia Department of Insurance. Question 2. Scenario question. Mr. Thompson operates a group of manufacturing plants in Georgia and is considering establishing a captive insurance company to cover his operations. He has conducted a feasibility study and determined that the captive could effectively manage the risks, but he is unsure about the regulatory requirements to form the company. Which of the following steps should Mr. Thompson take first in the process of forming his captive insurance company in Georgia? A. Submit a business plan to the Georgia Department of Insurance for approval. B. Raise the minimum required capital as per Georgia's regulations. C. Select a domicile for the captive and apply for a license. D. Hire an actuary to provide an actuarial report on the business viability of the captive. Answer: C. Select a domicile for the captive and apply for a license. Explanation: in Georgia, before forming a captive insurance company, the first step is to select the domicile and apply for the necessary license. The Georgia Captive Insurance Act outlines that an application for licensing must be submitted to the Georgia Department of Insurance, which includes submitting a business plan and demonstrating the financial viability of the proposed captive. Reason A. While a business plan is required for regulatory approval, it must accompany the application, not be submitted separately as the first step. Reason B. While raising capital is a necessary step, the approval process is the first step in the sequence before raising the required capital. Reason D. Hiring an actuary and obtaining an actuarial report are important but typically follow the submission of the licensing application. Question 3. Which of the following is true regarding the tax treatment of a Georgia-domiciled captive insurance company? A. Captives are exempt from state taxation entirely under Georgia law. B. A captive insurance company in Georgia can elect to be taxed under IRC 831. B. If it qualifies as a small insurer. C. Captive insurance companies must pay the same state taxes as traditional insurers in Georgia. D. Captives are taxed at a reduced rate for premiums paid by related parties only. Answer: B. A captive insurance company in Georgia can elect to be taxed under IRC 831. B. If it qualifies as a small insurer. Explanation: under the Internal Revenue Code, ERS, captives that qualify as small insurers can elect to be taxed under IRC 831. B, which allows them to exclude underwriting income from taxation, provided they meet certain premium thresholds. In Georgia, this election can be made for captives that meet the required criteria. Reason A. Captives are not exempt from state taxes entirely. While there may be specific exemptions or reduced rates for captives, they are not fully exempt from state taxation. Reason C. Captives are subject to specific regulations and tax treatments that differ from traditional insurance companies. Reason D. While captives may have different taxation based on their relationship with related parties, the tax treatment is not exclusively reduced for premiums paid by related parties, but can depend on other factors, such as eligibility for IRC 831B. Question 4. Which of the following is a key advantage of using a group captive insurance company? A. Greater control over the claims process by individual participants. B. Ability to pool risks with unrelated businesses to diversify exposure. C. Reduced capital requirements for forming the captive. D. More flexible regulatory oversight compared to single-parent captives. Answer: B. Ability to pool risks with unrelated businesses to diversify exposure. Explanation: group captives allow multiple businesses, often with similar or complementary risks, to pool their resources and share risk. This pooling diversifies exposure and spreads the financial burden of insurance claims, which can lead to low premiums and better risk management. Reason A: individual participants in group captives often do not have as much direct control over the claims process, as the management is typically centralized. Reason C: group captives usually require higher capital contributions due to the shared nature of the risks and the need to maintain financial stability for all participants. Reason D: group captives are subject to more complex regulatory oversight due to the involvement of multiple entities, unlike single-parent captives, which typically have a simpler structure. Question 5. Which of the following best describes the regulatory role of the Georgia Department of Insurance in captive insurance companies? A. The department oversees the formation of captives but does not regulate their operations. B. The department provides insurance to captives in case of insolvency. C. The department ensures captives comply with both state and federal regulations. D. The department only provides oversight of captives' tax filings. Answer: C. The department ensures captives comply with both state and federal regulations. Explanation: the Georgia Department of Insurance plays a significant regulatory role ensuring that captive insurance companies comply with both state laws and federal regulations, including solvency standards, reporting requirements, and governance practices. Reason A: the department is actively involved in the ongoing regulation and supervision of captives, not just their formation. Reason B: the department does not provide insurance coverage for captives. Rather, it regulates their financial stability and operations. Reason D: while the department does oversee tax filings, its role extends beyond just tax regulation to encompass broader compliance with the insurance laws and regulations of the state. Question 6. Which of the following best describes an essential component of a captive insurance company's business plan in Georgia? A. A detailed actuarial analysis of expected claims and premium income. B. A proposal for managing the risks of external parties. C. A strategy for investing in foreign markets and international insurance opportunities. D. A plan to generate income solely through reinsurance agreements. Answer: A detailed actuarial analysis of expected claims and premium income. Explanation: a key component of a business plan for forming a captive in Georgia is an actuarial analysis that assesses the expected claims, premiums, and overall financial viability of the captive. This analysis helps ensure that the captive is financially stable and can meet regulatory solvency requirements. Reason B: the focus of the business plan should be on the captive's internal risks and operations, not on managing external risks. Reason C: although investment strategies may be part of the broader financial plan, the core focus should be on risk management and solvency rather than generating income through international investments. Reason D: reinsurance agreements can be a part of a captive's overall strategy, but they are not the sole focus of the business plan. Question 7. Scenario question. Mr. Clark owns a large chain of retail stores and is considering forming a captive insurance company in Georgia to cover his liability risks. He wants to ensure that the captive's operations will comply with Georgia's regulations, particularly regarding solvency and reserves. What is Mr. Clark's best course of action to ensure compliance with Georgia's solvency and reserve requirements? A. Make sure the captive maintains a minimum capital of $250,000 as per Georgia law. B. Hire an actuary to determine the appropriate reserves for the captive's claims. C. Limit the captive's insurance policies to a single line of coverage to reduce exposure. D. Rely on the federal solvency standards rather than Georgia's state requirements. Answer: B. Hire an actuary to determine the appropriate reserves for the captive's claims. Explanation: in Georgia, captives are required to maintain appropriate reserves to cover potential claims, and the best way to determine this is by hiring a qualified actuary. The actuary will assess the risks and establish the reserves based on the projected liabilities. Reason A: the capital requirements are set by Georgia law, but ensuring solvency involves more than just meeting the capital threshold. Reserves, calculated by an actuary, play a critical role in compliance. Reason C: while limiting exposure could reduce risk, it does not directly address the issue of solvency and reserves. Reason D: Georgia's state regulations for solvency and reserves must be followed. Federal solvency standards may not align with specific state requirements. Question 8. Which of the following is a requirement for the ongoing compliance of a captive insurance company in Georgia? A. The captive must file annual audited financial statements with the Georgia Department of Insurance. B. The captive must hire a third-party claims administrator for all claims C. The captive is exempt from regulatory reporting after the first 5 years of operation. D. The captive must maintain its premiums at a constant rate each year to ensure solvency. Answer A. The captive must file annual audited financial statements with the Georgia Department of Insurance. Explanation: Georgia law requires that captives submit annual audited financial statements to the Department of Insurance to ensure ongoing solvency and financial health. These audits are critical for monitoring the captive's compliance with regulatory standards and financial stability. Reason B. While many captives use third-party claims administrators, this is not a mandatory requirement. Reason C. Captives must continue to comply with reporting requirements and submit annual financial statements throughout their operation, not just in the first 5 years. Reason D. Premium rates can fluctuate based on risk and actuarial analysis. There is no mandate to maintain premiums at a fixed rate to ensure solvency. Question 9. Which of the following is an example of a situation where a captive insurance company in Georgia might need to submit an actuarial report? A. To determine the profitability of the captive in the first year of operation. B. To assess the adequacy of the reserves for current and future claims. C. To report its tax liabilities for the state of Georgia. D. To assess the effectiveness of its risk management program. Answer B. To assess the adequacy of the reserves for current and future claims. Explanation: Actuarial reports are critical for determining whether a captive has set aside sufficient reserves to cover its liabilities, both present and future. These reports ensure that the captive is financially prepared to handle its claims and meet regulatory solvency requirements. Reason A. While profitability is important, actuarial reports are not typically used solely for profitability analysis. Reason C. Actuarial reports do not focus on tax liabilities. They are concerned with financial stability, specifically reserves. Reason D. Although risk management assessment is important, it is not the primary purpose of an actuarial report, which focuses on financial solvency. Question 10. Which of the following is true about the Georgia Captive Insurance Act in relation to premium taxes? A. Captives in Georgia are subject to a flat premium tax rate of 2%. B. Georgia imposes a higher premium tax rate for captives insuring related parties. C. Premium taxes are only assessed on premiums paid to Georgia domiciled captives. D. Captives are exempt from premium taxes if they are set up for a single line of coverage. Answer A. Captives in Georgia are subject to a flat premium tax rate of 2%. Explanation: Under the Georgia Captive Insurance Act, captives are subject to a flat premium tax rate of 2%. This applies to all premiums written by the captive, regardless of the insured entity's relationship with the parent company. Reason B. Premium taxes do not vary based on whether the insurance is provided to related parties. Reason C. Premium taxes apply to premiums written by Georgia domiciled captives, not just premiums paid to captives. Reason D. Captives are not exempt from premium taxes based on the number of lines of coverage. The 2% tax applies generally. Question 11. Which of the following best describes the purpose of a captive manager for a captive insurance company in Georgia? A. To ensure that the captive has adequate capital for underwriting. B. To provide claims handling and adjuster services for the captive. C. To manage the daily operations and compliance of the captive insurance company. D. To set the premium rates for the captive's policies. Answer C. To manage the daily operations and compliance of the captive insurance company. Explanation: A captive manager is responsible for overseeing the day-to-day operations of a captive insurance company, including compliance with state regulations, financial reporting, and operational management. They ensure the captive adheres to regulatory requirements and manage its operations effectively. Reason A. While the captive manager plays a role in financial oversight, ensuring adequate capital is typically the responsibility of the captive's actuary or financial officer. Reason B. Claims handling may be outsourced to third-party administrators, but the captive manager does not typically handle claims directly. Reason D. The captive manager does not set premium rates, but may assist in evaluating them alongside actuaries. Question 12. What is the minimum capital requirement for forming a captive insurance company in Georgia? A. $100,000. B. $250,000. C. $500,000. D. $1 million. Answer B. $250,000. Explanation: Georgia requires a minimum capital of $250,000 to form a captive insurance company. This capital requirement ensures the financial stability of the captive and its ability to cover liabilities. Reason A. The minimum capital is $250,000, not $100,000. Reason C. While some states may require more capital for specific types of captives, Georgia's requirement is $250,000. Reason D. Georgia does not require $1 million for capital. The threshold is $250,000. Question 13. Which of the following is an advantage of establishing a captive insurance company in Georgia? A. Exemption from all state taxes on premium income. B. The ability to insure a broad range of risks, including those not traditionally covered by commercial insurers. C. The captive must offer coverage to third-party policyholders. D. Requirement to use Georgia-domiciled third-party claims adjusters for all claims. Answer B. The ability to insure a broad range of risks, including those not traditionally covered by commercial insurers. Explanation. A key advantage of forming a captive insurance company in Georgia is the ability to cover a wide array of risks, including risks that commercial insurers might exclude. This flexibility allows businesses to tailor coverage to their specific needs. Reason A. While captives benefit from tax advantages, they are not exempt from all state taxes on premium income. Reason C. Captives are typically formed to insure the parent company or affiliated entities, not necessarily third-party policyholders. Reason D. There is no requirement to use Georgia-domiciled claims adjusters. The captives can use adjusters from outside the state. Question 14. What is a key requirement for a captive insurance company to qualify as a pure captive in Georgia? A. The captive must insure only the risks of its parent company or affiliated entities. B. The captive must insure a wide range of unrelated third-party risks. C. The captive must provide insurance coverage for multiple unrelated industries. D. The captive must offer reinsurance services to other insurers. Answer A. The captive must insure only the risks of its parent company or affiliated entities. Explanation. A pure captive is one that only insures the risks of its parent company or its affiliated entities. This is a defining characteristic of a pure captive insurance company. Reason B. A pure captive only covers the risks of the parent and affiliates, not unrelated third-party risks. Reason C. A pure captive does not insure risks for unrelated industries or third parties. Reason D. Offering reinsurance services is not a requirement for a pure captive. Question 15. Which of the following best describes the risk retention group release structure in Georgia? A. A group of unrelated entities pooling risks to lower premiums. B. A group of captive insurers formed to share risks among multiple participants. C. A group formed by a single entity to self-insure its risks. D. A group formed by government entities to manage their collective risks. Answer B. A group of captive insurers formed to share risks among multiple participants. Explanation. A risk retention group (RRG) in Georgia is formed by multiple businesses that pool their resources to share insurance risks. This allows for collective risk sharing among the members, typically focusing on liability risks. Reason A. While an RRG involves multiple entities, its focus is on risk sharing among members, not pooling risks for lowering premiums. Reason C. A single entity would not form a risk retention group. It involves multiple entities. Reason D. While government entities may form groups to manage collective risks, RRGs are typically composed of private entities. Question 16. Which of the following is required for a captive insurance company to be licensed to operate in Georgia? A. It must have at least 10 independent third-party policyholders. B. It must submit a comprehensive business plan to the Georgia Department of Insurance. C. It must be domiciled in a foreign jurisdiction. D. It must provide reinsurance coverage to at least 5 other captives. Answer B. It must submit a comprehensive business plan to the Georgia Department of Insurance. Explanation. A key requirement for obtaining a license to operate in Georgia is submitting a detailed business plan to the Georgia Department of Insurance. This plan must include risk management strategies, financial projections, and an outline of the captive's operations. Reason A. Captives do not require independent third-party policyholders for licensing, as they typically insure the risks of the parent company or its affiliates. Reason C. Captives in Georgia can be domiciled in Georgia, not necessarily in a foreign jurisdiction. Reason D. Reinsurance coverage to other captives is not a requirement for licensing. Question 17. Which of the following is true about the Georgia Department of Insurance's role in a captive insurance company's financial oversight? A. The department only reviews financials at the time of initial licensure. B. The department conducts regular audits and financial assessments to ensure solvency. C. The department does not require captives to submit annual reports. D. The department does not regulate the investment activities of captives. Answer B. The department conducts regular audits and financial assessments to ensure solvency. Explanation: the Georgia Department of Insurance plays an active role in overseeing captives' financial health through regular audits and assessments to ensure solvency and compliance with regulatory requirements. Reason A. The department reviews financials regularly, not just at the time of initial licensure. Reason C. Captives are required to submit annual financial reports to the department. Reason D. The department does regulate the investment activities of captives to ensure financial stability. Question 18. Which of the following is a characteristic of a branch captive in Georgia? A. The captive operates as an independent entity with no connection to the parent company. B. The branch operates as a separate legal entity from the parent company. C. The captive is part of a larger foreign parent company and operates under that company's umbrella. D. The branch is restricted to only writing third-party liability coverage. Answer C. The captive is part of a larger foreign parent company and operates under that company's umbrella. Explanation: a branch captive operates under the umbrella of a larger foreign parent company. It is typically a foreign domiciled captive with a branch established in Georgia to serve specific operational needs in the U.S. Reason A. A branch captive is not independent but is part of a larger foreign parent company. Reason B. A branch does not operate as a separate legal entity, it is a part of the foreign parent company. Reason D. The captive may cover a variety of risks, not just third-party liability. Question 19. What is a major reason for businesses to choose Georgia as the domicile for their captive insurance company? A. The absence of any regulatory oversight by the Georgia Department of Insurance. B. Georgia's favorable tax laws and competitive premium tax rates. C. The requirement to insure third-party risks to qualify for tax advantages. D. The lack of capital requirements for forming a captive in Georgia. Answer B. Georgia's favorable tax laws and competitive premium tax rates. Explanation: Georgia offers favorable tax laws and competitive premium tax rates, making it an attractive domicile for captive insurance companies. These financial advantages help businesses lower operational costs and maximize efficiency. Reason A. Georgia has regulatory oversight to ensure compliance and financial stability. Reason C. Captives in Georgia do not need to insure third-party risks to qualify for tax benefits. Reason D. While Georgia has a minimum capital requirement, it is still relatively low compared to other states. Question 20. In Georgia, what type of insurance business is a special purpose financial captive SPFC allowed to engage in? A. Insuring the risks of its parent company and affiliated entities only. B. Providing insurance to third-party policyholders only. C. Issuing insurance policies as a direct insurer to the general public. D. Using its capital to underwrite reinsurance and structured finance transactions. Answer D. Using its capital to underwrite reinsurance and structured finance transactions. Explanation: the special purpose financial captive SPFC in Georgia is allowed to engage in structured finance and reinsurance transactions, which is distinct from traditional insurance. These captives are typically used to help manage complex financial risks, often in the areas of asset-backed securities and other financial products. Reason A. This describes a pure captive, not an SPFC. Reason B. SPFCs are not intended to provide traditional insurance to third-party policyholders. Reason C. SPFCs are not meant for issuing traditional insurance policies to the public but rather focus on financial and reinsurance transactions. Question 21. What is a potential disadvantage of operating a captive insurance company in Georgia? A. High regulatory and compliance requirements compared to other states. B. Lack of access to reinsurance markets for captives. C. Inability to offer certain types of insurance coverage. D. Limited investment options for captive assets. Answer A. High regulatory and compliance requirements compared to other states. Explanation: operating a captive insurance company in Georgia may come with higher regulatory and compliance requirements than some other states. This could include more detailed reporting, audits, and compliance checks, which may be burdensome for some businesses. Reason B. Georgia provides access to reinsurance markets for captives. Reason C. Captives in Georgia can generally offer a wide range of coverage subject to their business plan and licensing. Reason D. While investment options are regulated, Georgia captives generally have a broad range of investment choices. Question 22. What is the role of an actuary for a captive insurance company in Georgia? A. To set the premium rates for the captive's policies. B. To manage the day-to-day operations of the captive. C. To ensure that the captive has sufficient capital and reserves to meet its obligations. D. To file all regulatory documents with the Georgia Department of Insurance. Answer: C. To ensure that the captive has sufficient capital and reserves to meet its obligations. Explanation: An actuary's primary role is to assess and manage the financial stability of the captive, ensuring that it has sufficient capital and reserves to cover potential claims and future liabilities. Reason A. While actuaries assist in setting premium rates, they do not independently set the rates. Reason B. The actuary does not manage day-to-day operations. That is the role of the captive manager. Reason D. Filing regulatory documents is typically the responsibility of the captive manager or legal team, not the actuary. Question 23. Which of the following is true about the ownership structure of a captive insurance company in Georgia? A. A captive must be owned by a government entity. B. A captive must have at least 3 unrelated shareholders. C. A captive can be wholly owned by its parent company or affiliates. D. A captive must have publicly traded shares. Answer: C. A captive can be wholly owned by its parent company or affiliates. Explanation: Captive insurance companies in Georgia can be wholly owned by their parent company or affiliated entities. This allows businesses to have complete control over their insurance operations. Reason A. Captives are typically owned by private businesses, not government entities. Reason B. Captives can be single-owner entities, especially in the case of pure captives. Reason D. Captives are privately held companies and do not require publicly traded shares. Question 24. What is a key benefit of a Georgia-domiciled captive insurance company offering fronting arrangements? A. The ability to write policies for other insurance companies. B. Access to reinsurance markets with favorable terms. C. The ability to write policies for other captive insurance companies. D. The ability to provide coverage for risks outside of the parent company's industry. Answer: B. The access to reinsurance markets with favorable terms. Explanation: Fronting is an arrangement where a captive insurance company partners with a commercial insurer to issue policies on its behalf. This allows the captive to access reinsurance markets, often at more favorable terms, and helps meet regulatory requirements. Reason A. Fronting does not involve writing policies for other insurers but for the captive itself. Reason C. Fronting is typically used to facilitate access to the broader reinsurance market, not for writing policies for other captives. Reason D. Fronting is not directly related to providing coverage for unrelated industries, but rather to facilitating reinsurance access. Question 25. How does the Georgia Department of Insurance regulate the solvency of captive insurance companies? A. By requiring captives to submit annual audited financial statements. B. By setting strict limits on the types of investments captives can make. C. By reviewing the captive's market share and competitive position annually. D. By requiring captives to maintain a certain level of profitability each year. Answer: A. By requiring captives to submit annual audited financial statements. Explanation: The Georgia Department of Insurance ensures the solvency of captives by requiring them to submit annual audited financial statements. This allows regulators to assess the financial health of captives and ensure they have enough reserves to meet their obligations. Reason B. While the department regulates investments, it does not set strict limits on all types of investments. Reason C. Market share and competitive position are not the primary focus for solvency regulation. Reason D. While profitability is important, the primary focus is on ensuring the captive has adequate reserves, not specifically requiring profitability. Question 26. What is the primary purpose of a protected cell captive in Georgia? A. To pool resources for risk sharing among multiple unrelated businesses. B. To allow businesses to segregate risks and assets in separate cells for individual protection. C. To offer insurance coverage to the general public. D. To create a self-insured retention program for large businesses. Answer: B. To allow businesses to segregate risks and assets in separate cells for individual protection. Explanation: A protected cell captive allows businesses to create separate cells within the same captive insurance company. Each cell has its own assets and liabilities, protecting each business from the risks of others within the same structure. Reason A. Protected cell captives allow risk segregation, not pooling resources. Reason C. These captives typically insure the risks of the parent or affiliated entities, not the general public. Reason D. A protected cell captive is not specifically designed for self-insured retention programs. Question 27. Which of the following is a requirement for forming a captive insurance company in Georgia? A. The parent company must be publicly traded. B. The captive must be domiciled in a foreign country. C. The parent company must meet specific minimum capitalization requirements. D. The captive must offer health insurance as its primary coverage. Answer C. The parent company must meet specific minimum capitalization requirements. Explanation: in Georgia, forming a captive insurance company requires the parent company to meet minimum capitalization requirements, ensuring that the captive has adequate financial resources to meet its obligations. Reason A. The parent company does not need to be publicly traded. Reason B. Captives can be domiciled in Georgia or other states, and there is no requirement to be based in a foreign country. Reason D. Captives are not required to offer any specific type of insurance, so they can offer a wide range of coverages, including property, casualty, and liability. Question 20. What is the maximum number of shareholders allowed in a pure captive insurance company in Georgia? A1, B2, C10, D50. Answer A1. Explanation: a pure captive is typically owned by a single parent company. It is designed to insure the risks of that company and its affiliates, and it can have just one shareholder, typically the parent company itself. Reason B. A pure captive does not require multiple shareholders. Reason C. Captives can be formed with a single shareholder, so 10 is unnecessary. Reason D. The number of shareholders is not constrained to 50 for a pure captive. Question 29. What is the purpose of the Georgia Captive Insurance Company Act? A. To encourage the creation of new commercial insurance companies in Georgia. B. To regulate captive insurance companies and ensure their financial stability. C. To provide tax incentives for public insurers domiciled in Georgia. D. To oversee claims settlements for businesses operating in Georgia. Answer B. To regulate captive insurance companies and ensure their financial stability. Explanation: the Georgia Captive Insurance Company Act was enacted to regulate captive insurance companies, ensuring they remain financially stable and able to meet their obligations. The Act provides a legal framework for the formation and operation of captives in the state. Reason A. The Act is specifically for regulating captive insurers, not commercial insurance companies. Reason C. The Act does not primarily provide tax incentives for public insurers, but it does regulate captives. Reason D. The Act does not focus on overseeing claims settlements. It regulates the formation and operation of captives. Question 30. What is one key advantage of using a rent-a-captive insurance company in Georgia? A. It allows businesses to avoid paying taxes on premiums. B. It enables businesses to gain access to the benefits of a captive without forming their own. C. It guarantees that businesses will have lower insurance premiums. D. It eliminates the need for businesses to maintain insurance reserves. Answer B. It enables businesses to gain access to the benefits of a captive without forming their own. Explanation: a rent-a-captive allows businesses to participate in the benefits of a captive insurance structure without having to create their own. This is particularly beneficial for smaller companies or those that do not have the resources to form a full captive. Reason A. Rent-a-captives do not exempt businesses from paying taxes on premiums. Reason C. Rent-a-captives do not guarantee lower premiums, but they provide access to a shared captive structure that may be more cost-effective. Reason D. Rent-a-captives still require businesses to maintain some level of reserves, as with any other insurance structure.